Do you think it's possible for you? 100% agree that your service is essential to that customer segment, and they have to work within their rules and regulations and requirements now. Do you think it's possible to push innovation? Because for undoubtedly the most unique feature of Bitcoin, another crypto potentially, you could argue, but let's look at Bitcoin itself. It's the idea of an asset that you can share custody. I mean, there's no other asset class in the world that you can literally share custody. And that surely is a strong selling point. Again, would your typical client even care about that? Or is this something you just have to sort of drip feed from underneath for them down the line and say, this is better now? You don't even, you don't need to explain why, but this is better now. Your funds are even more secure.
I don't think we'll ever get to the point where we can say you don't need to worry, it's better. But I think, I agree. It's an evolution. I think it depends, and again, it depends on the background of the customer you're dealing. If you're dealing with crypto natives, you have a much more evolved conversation. If you're dealing with institutional, TradFi institutions that are coming in, you have to make it look like TradFi. You have to make it look and feel like TradFi. It has to work and behave in a way that they understand. You have to talk to them in a way that they recognise for them to get that comfort to take that step in. So I think you will see the evolution, and I think that's where it gets really interesting. Can you use the technology to improve? But you've got to do that in a way that works with all of the other burdens that regulated institutions face.
Yeah, I mean, under current regulation, under current law, the concept of shared custody of an asset probably doesn't exist. You then need to jump through the hoops of getting it recognised legally.
The question of does custody exist and under what scenarios? Again, it's not if you look at digital assets, the bearer assets, that brings a lot of complexity around the legal framework, certainty of bankruptcy, remoteness. They're not well recognised in the current legal regulatory framework. So you've got to start piecing that together. The more complexity you bring into that, the more difficult it is to answer those questions. So I think work in progress.
Okay. Well, Nick, maybe we move on to future possibilities, because I know you've worked on various different sort of innovative concepts around Bitcoin, especially on Bitcoin. Was it a year or two ago, there was a paper published, the idea of state chains. And I recall, I think I probably had like three light bulb moments. I remember Bitcoin, obviously when we finally grasped how that bloody worked, was a bit of a light bulb moment, and then there's always questioning how you separate the idea of the token value from the value of the underlying network as well, and then ideas around coloured coins and Mastercoin at the time came, the idea that you could use the network independently, which also led on to NFTs, etc. at a later date. And then the idea with private keys, knowing that we have to jump through all these hoops to keep private keys so secure. You can't just give someone your private key, and someone would be very unwise to accept a private key and assume those bitcoins were going to still be yours at some point in the future. So up until now, the idea of moving private keys around and actually being able to transact by sharing private keys has not been possible. I think the closest we came was the OpenDime wallet, which was a secure capsule which contained your private key, which was tamper-proof, so you could literally use that and pass a private key around and know that it hasn't been tampered with. State chains, I'll let you maybe dive in a little bit deeper and tell people a bit more about it, is essentially a digital version of an open one. So with the need of an intermediary, people can start handing around private keys. I think this is really powerful. Could you maybe, for people who don't know or maybe not heard about them, can you talk about Mercury Wallet, what you've been working on, and explain state chains a little bit more?
Yes, state chains was an invention by Ruben Sampson around 2019. It's basically a way of transferring private keys around. So there's a lot of clever cryptography behind it, so there's two parties involved. But essentially, with some cryptographic tweaks, you can create this thing called a state coin, which has two private keys. A server, which would, in the Mercury Wallet case, be us, we keep a private key, but then the user can send his or her private key to another person doing these tweaks, but at no point does the server know the transfers that are going on or has custody of the funds. And it's not trustless in that you need the server to be available to send the key around, but it's non-custodial. If one day you wake up and the server's down, you have a backout transaction which you can broadcast to the Bitcoin blockchain and you can retrieve your funds. And predominantly the people who use it right now is for privacy reasons. They swap their keys. We actually have a service called a coin swapper, which some people might call a mixer, but we call it a coin swapper, where they meet other people and they swap their coins, which, you know, is no different than us going to the bar, putting all our open dimes in a cup, shaking it and taking it out, which I think is perfectly legal, perfectly acceptable. Where we see this scaling long term is to help Lightning Network scale. Bitcoin needs Lightning. Without Lightning, I don't think Bitcoin is anything other than a pet rock, in my view. We need the ability to be able to send money instantly, trustlessly. State chains allow people to go from the main chain to the Lightning chain, the Lightning Network, and potentially higher networks seamlessly. I think Bitcoin will scale in multiple layers. You know, we have Lightning, which is considered layer 2. I think we'll probably have a layer 3 at some point. There are people already building layer 3s, stuff like Fedimint, I don't know if you've heard of that. I think with a state chain, you'll be able to go through those layers quite seamlessly. The UI experience will be easier because you're transferring your key from layer to layer as opposed to going from network to network.
Yeah, so as you alluded to there, if you lost your state chain key, you've got that backup, you've got that recovery, you can have that go to a secure cold storage wallet or another private wallet. So it's essentially like it is the equivalent of your original banknotes being issued in return for a gold deposit. But you're not actually necessarily relying on that sort of gold custodian as well to make sure that that gold's there. So who knows if the gold's in the vaults?
For the Statechain wallet, are you still working with a seed phrase? It looks like a regular on-chain Bitcoin.
It's a 12-word
wallet.
seed, yeah, but we couldn't use it with the multi-sig that one exists. We use MPC cryptography.
Right.
But we're not into key management with other people like you do that.
Just while we're on some of the new novel technology, there's the recent upgrades opened up a few new opportunities on the Bitcoin protocol. Is there anything else in that mix that you think could
Well, Taproot has obviously made a lot of noise because of these ordinals and NFTs, which has made a lot of hype. But people forget that Taproot was actually created to improve multi-sig. I think, have you heard of MuSig or MuSig 2? So multi-sig's quite messy in Bitcoin. If you have a 2 or 3 multi-sig, you need 3 keys, but you also have to keep the script signature, which I presume you guys manage for the clients.
Yeah, so we tell the client we call it a multi-sig config file.
Yeah.
The client has to download that in addition to their keys. We also maintain a copy, so if they lose that, it's not.
So I think MuSig will allow that no longer to exist. So that should improve the user experience. But that's still years away.
I mean, there's lots of other advantages to MuSig. Like when you make a 2 or 3 transaction on the blockchain, it has quite a large footprint, so you're paying more in fees. And then also, just from a privacy perspective, everybody can see that you're using a 2 or 3, or anybody you're transacting with can see you using a 2 or 3 wallet, so they have a good idea of it's maybe Boston Green or a chain. So there's other advantages as well.
So, I mean, I know that we have focused quite a bit, or spoken about just key management in general, and discussed a lot around how that applies to Bitcoin as well. But look, obviously, the innovation going on in the world of DeFi, Ethereum and beyond, the derivative networks that it's inspired, etc. It's a problem there as well. Keiran, I mean, it's an area that you're looking in, and obviously your wallet opens up access to different networks as well. What sort of additional problems? It applies equally across Ethereum and those similar networks. There's additional risks that they brought in around smart contracts. It's one thing having the simplicity of a Solidity smart contract, but maybe that simplicity is a double-edged sword as well.
Yeah.
So is this opening up, as we start to improve and solve certain problems underneath, are we just seeing more problems open up as well?
Yeah, I mean, smart contracts are, it's like I've done this piece of code for me, and I didn't actually check that this code doesn't have any backdoors, etc. Which is pretty much what happens every time. Luckily, that's not something we actually have to worry about here at Blockchain because we're just providing access to dApps and stuff like that. And at that point, it's very much you're on your own. This is a list of dApps. You can connect to it and you can choose whether to or not. So from that perspective, we've kind of pushed the problem aside. But I think it goes back to that whole thing around trust. And I think it's just not fair on the user to say, you can go and read the code, and that tells you whether this is good enough or not. Because most people can't read code, and even if you can read code, you don't necessarily spot everything. And so, smart contracts have that inherent usability issue. You have that, there's a barrier to entry. But yeah, in terms of like other problems, like keys are the biggest one for sure. The other things I see as sort of problematic is just like things like RBF attacks, and this is less of a problem where you get sort of chains which work faster. But if you're waiting for 10 minutes and you have to have like 12 confirmations and stuff like that, I mean that's not a means of exchange really. When I can send a bank transfer over a fast payment system right now and it comes in 20 seconds, and I can buy a motorbike quite legitimately like that the other day. Like, can't do that yet in certain places. I think the other thing that's a barrier to entry is just the kind of volatility of the assets themselves as well. So like fiat, for all its problems, in Western world is relatively stable, and I think one of the usability issues that's kind of getting addressed is actually stable coins, and I know that we've had some crappy ones like Terra, but things like USDC, and stuff like that, they're pretty secure really if you think about how it works. It's government bonds and things that actually do that. Again, these are the things that are sort of helping people come on board. And actually, if you look at transaction data, people are generally using Bitcoin these days. Chat to Alexa in the audience, using Bitcoin these days in the DeFi space to then, borrow USDC so they can actually transact essentially in fiat across these chains. And so the whole thing of like governmentless and this sort of stuff, it's all getting blurred. It doesn't necessarily matter anymore. It's like you can choose to be governmentless, or you can choose to use stable coins, you can do all sorts of stuff. So I think like the space is definitely opening up. I think like these sort of DAOs and these DeFi protocols and stuff like that, that's where I think there's like a lot of trust that still needs to be built. So Aave, Compound, those types of things, they're pretty technical things anyway. You have to be pretty financially savvy anyway, and then you also have to trust that that system is legit. And I think like that's really where I think the problem is like. It's just legitimacy and trust.
Well, I think, as I said earlier, I think we're all guilty of getting complacent to some degree, especially using centralised exchanges and the trust that, especially the unfortunate part is the more recent newcomers that have sort of come into this and rely on other people's recommendations and assuming that some of those risks from the past have disappeared. How have you seen the industry react, Suzanne? Have like the remaining exchanges who I think are honestly doing their best to operate legitimately, they must be understanding now that for them to thrive, they are going to have to look at maybe some of these other models, and especially around separation of custody and execution, etc. How are they engaging with firms such as yours and maybe Neil as well, whether you're engaged in any of those sorts of conversations with your sorts of clients?
We've seen a massive shift. I mean, let's be clear. I mean, I think there was always demand from the institutions to stop pre-funding on exchanges. They wanted their funds to stay with a trusted party, but they still want the access to the liquidity that gives. What's changed? So that has just ramped up, but what we've seen now is the willingness of the exchanges to actually engage and recognise they need to change their business models, they need to facilitate that type of model. I think it's, and I think we're seeing some of the smaller exchanges viewing this as their opportunity to kind of eat the lunch of the bigger guys. Can they change that paradigm? Can they split up those business models in a way that benefits them, helps them gain market share against some of the bigger guys who may find it more problematic to do that, or may say, you can use our custodian, but does anybody really understand what that custodian is? How separate is it? What are the rights? You start unpeeling legal entity structures, are they really separate? So, so I think it's that willingness to recognise their business model needs to change, their processes need to change, and actually the value piece, it needs to be split. You need to really, have the exchange focus on that, bringing liquidity together, giving seamless execution. They don't need to hold the custody. They can do that very effectively with a third party and still give customers the access to liquidity that they need. So, I think it's been the irony of the situations. I think it's very positive behaviours and positive shifts in terms of actually putting better solutions together.
Good.
Could you clarify the question? Is it what's changed since the?
Well, have you seen other people more broadly, rather than everyone operating in silos and trying to maintain their own competitive advantages? Are they now understanding that maybe as an ecosystem, people need to be working together? So, are you seeing demand for, or more quite like with your typical user, be looking for how they can use your service in conjunction with a number of exchanges, or exchanges even looking out to firms such as yours to see how we can collaborate?
I wouldn't really say there's been a whole lot of collaboration between Unchained and other people. Like our client base is largely just individuals, small businesses, family offices, miners, merchants, things like that. I mean, the big change we've seen since crypto contagion is just a lot more interest. Like everybody suddenly is very motivated. So a lot of people knew of our existence, but perhaps didn't pull the trigger, and then they were just like, okay, let's get my coins off the exchange. So so a big spike in that. We've had growth. Normally, I've worked at a lot of startups in bear markets, and every time you see a drop off in users, drop off in trading volume, it's generally a very miserable time. But for Unchained, it's the complete opposite. Bear market, everybody's give me some of that. So we've seen more growth than during the bull market even. So that's been nice.
Okay, cool. Well, I'm conscious of time. Over to the audience. Does anyone have any questions for our panelists?
Thanks. You briefly mentioned music before being a potential improvement to multisigs. Does the current state of music support fault attribution? So do you actually know who signed? Because I thought, because that's the issue with threshold BCDSA, that you don't know who signed, so something did go wrong. I wouldn't know. So let's say I lost the key, and it's 2 or 3 threshold or music, right? Would I know if Unchained collaborated with authorities or somebody else to actually take my crypto? Yeah. So with threshold, it doesn't work. Does it work with music?
I'm not the biggest music expert. I do know that it requires a lot more interactivity than standard Bitcoin multisig. So that poses an issue. Like if you're using offline hardware wallets, it means you have to have a few rounds of communication with the computer, which isn't ideal. It's not a great user experience, but also there's potential vulnerabilities there. That's as far as I can talk in terms of deficiencies. We're not ready to adopt music. We need to see some more improvements on it first. I'll leave it to potentially more technical people to answer the question.
Music I think it's been dropped anyway, and now they're doing music too, and that's still in discussion phase, it's still being checked. So a couple of years away before they finalise the spec, it seems.
Sorry, Sam, you were second.
So this is kind of returning to the overall theme, but very regulatory focused approach to the question. What do you think banking licenses might look like in 10 to 20 years time when we're on equal par? Because at the moment, comparing crypto to fiat in that respect is pretty ridiculous, really. But it's so fundamental to what we regard as normal banking. That's an open question.
I mean, banking licenses, Wise, for example, doesn't have a banking license, right? But it doesn't TradFi. So it works on an e-money license, as does Revolut as well. Right? So for now, let's see what happens. I'm hoping we get it. But really, you need a banking license in order to lend money and to not hold as much capital. So really, it's a kind of custodial world that applies to. It'd be interesting to see what happens with, say, Aave and Compound, right? Because it's hard to provide collateral and this sort of stuff. But I don't think because it's 100% capitalized, you don't have to. I think that's essentially where the banking licenses comes into play. So if you only need to hold 10% of the capital of your deposits, that's when you need a banking license. And crypto obviously just doesn't have that issue.
I think another thing that I'm not particularly optimistic on the regulatory front, and I think as kind of the clause descend, it's going to provide a lot more motivation for people to be their own bank and take self-custody. Obviously, exchange hacks provide some motivation, but I think when people start to see okay, I can't do that with my money, and I can't do that with my money, those people can, there'll be a lot more interest in putting things in your own wallet to take yourself custody.
I think your 10-year horizon is way too short.
Probably.
At the rate regulators move. And I think you're probably seeing more commonalities with TradFi than less. And I think, it comes back, for me, a lot of it will come back to retail. It's the deposit question. You already saw people in the US saying, why wasn't I protected? Why am I not getting my money back? So, you can't have those types of consumer protections without some form of regulation. You can't have deposit protection without capital. So I think there is, I think that piece, I think the consumer piece of that will drive certain outcomes because people will be expected to be protected. And the more it becomes common, the more you will see that question raised. At the margin, I think there will be differences, but I think that core piece.
Yeah, I think I agree totally. Regulation actually builds trust in some ways, and it doesn't feel like that. But if these crypto exchanges had been more highly regulated, and Free Arrow's Capital as well, for example, and anyone that dealt with Free Arrow's Capital and lent them money, we would, probably be forced to do much more risk-averse types of thing. There would have been way more checks and balances in there, and that could have only been a good thing, right? That actually would have protected the whole industry if that had been there, and it wasn't, because it's an unregulated industry. And actually, I think we should be welcoming certain types of regulation because actually it just will make the ecosystem better, and it will mean that we can avoid bad actors.
Well, what was FTX a regulated? It's still a regulated organisation. I mean, they were still operating under a law of regulation.
No, I totally agree, but there was also there's also a certain lack of. So if you run a proper financial institution which does TradFi stuff, there is way more scrutiny. You actually have auditors coming in all the time to check on your books to make sure that your collateral isn't just these weird FTX tokens that don't really exist.
The point of crypto was not to create these systems, it was for self-custody.
Absolutely.
Yeah. And we saw even Celsius, which obviously was bad, but when they went into bankruptcy, some old judge decided to make public all the depositors, and no regulation could have protected you from that. You also have this situation with the Canadian truckers where, the Prime Minister decides to block everyone in bank accounts because they were protesting. No regulation can stop that. I think it's very key that, we understand why Bitcoin exists and Ethereum. Sure. And that is to avoid the regulators. And that's
why you should custody your own.
And
if you have been attacked, but if you have an exchange, it should be regulated. If it's essentially copying.
I think the key word, it's an exchange. It's not a place to store money. And I think that's where people get confused.
Okay, but if you have a brokerage there, if you have if you have deposits, then it should be regulated. And we're in this weird space right now where you can deposit money into certain companies, call themselves crypto companies, and there's less scrutiny because of it. And that's an issue. And I agree totally. The way around it is just custody it yourself, for sure. And you make that more usable and people don't need it anymore. And then you have DeFi protocols and decentralized bridges and stuff like that. So all of that is more trustworthy. Absolutely. That's probably the way forward. But at the moment, there's kind of, in a way, the TradFi sort of stuff has actually caused a big piece of damage to the reputation of crypto. And I think if you're looking at this from the outside in and you don't understand the difference between self-custody and custody, you just see it as one big blob of bad actors. And so I think it's important that companies like Commerceblock, who do both, should welcome regulation and actually say, this is what we should be looking for.
I agree. I mean, I think the irony of a lot of what we've seen is down to bad behaviour. It's not about the product, it's not about the technology, it's not about it's about absolute bad behaviour by a small group of individuals. And they were regulated, but they clearly weren't subject to regulation that got into the weeds and stopped them doing what they should, because it should have been glaringly obvious. And I think the problem for me is there are very educated users who absolutely should be able to do what they want, how they want to do it, but as it becomes more and more mainstream, there's a bit of duty of care around the less educated investors who need that protection. Now, again, it doesn't have to look the same way it does now. It can be a different variant, but there does need to be some.
I mean, you can take the purest view, and like, you know, in the purest world, it's like, well, Bitcoin, other crypto could just grow in complete isolation. But would it have been possible if you hadn't had it? You know, you wouldn't have been able to. You know, if you're looking specifically as price as a measure of success, then without centralised exchanges and without those boring old models, even if they were badly established, because there wasn't the regulation to force people, wasn't, to be honest, the knowledge for especially the people building the early exchanges. They literally, you know, were building in their bedrooms and had no experience in traditional markets. So, you know, I guess it's a case of having to build a bridge between these two worlds, and you have to start off by looking a little bit like the old world. But I think, you know, the important part is that the people within the industry keep an eye on where they want it to go and still keep that long-term vision. And I think it just takes time to get there. We'll take, sorry, Sam, you had a question. We'll take one more, and then we've got answers coming.
Yeah, when I came to this talk, I was really interested in how I could be my own bank. And I guess the comparator, I watched Bank of Dave, and I sort of wondered where the overlap would lie in 10 years' time. Could you get a situation where Dorset creates its own local bank for businesses in Dorset, and it could be started by a relatively well-heeled businessman that clearly could understand business, and he could use a decentralized form of wallet or a system of wallets that you've sort of described? Like, is that a realistic? And then the slight supplementary to that is, could a non-sentient entity, like a computer set on a blockchain, set in, I mean, I work in the energy background and I apply blockchain to that. So for me, I want to see things trade with each other, but they could actually loan things whilst they're trading, which would create liquidity in markets. As I sort of, if you could answer maybe half of that question, then great.
Well, I think we're very, very close to being able to do that. So, I mean, the Dorset example, yeah, 100% that you can do it pretty much today. Because, I mean, look, Avalanche, I think it's Hungarian government, no, it's a Greek government or Hungarian, they're literally going to use Avalanche to launch their own digital coin. You could do it at a local level, you could do it at a nation state level, you could do it as a co-op. I mean, I think that's all pretty much there already now. It's just about making sure that the interfaces to it are clean and understandable. The underlying framework and technology is absolutely there. I'd say so.
Great. Okay. I'd like to thank you very much to all of our panelists. Thank you for your time and for sharing your thoughts. Thank you everyone for coming. We do have pizza on its way, maybe in 5 or 10 minutes or so, but please go grab a drink and socialise and make new friends. And we'll be